Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two high-yield dividend stocks that analysts rate a strong buy. So let's get into it. All right, guys, welcome back. Thank you all so much for being here, and I hope you're having a great weekend. Today, we're taking a look at two stocks with high dividend yields, both over 5%, that also come in with a strong buy consensus from Wall Street analysts. But not just that, it's important to not get sidetracked only looking at a high dividend yield. So we're also factoring in things like a reasonable payout ratio and making sure that that yield isn't inflated just because the stock has dropped in price. To find these stocks, we used the TipRanks stock screener. Found under the screener menu, we put in a few different filters, including a strong buy consensus from analysts and a very high dividend yield. But then by going to other filters, we added in a payout ratio to make sure that was below 60%. I then took into consideration the performance over the past 3 months and 1 year. You can check out the stock screener for yourself on the TipRanks website or right on the mobile app as well. Links to download are in the description down below. Just before we get into these stocks, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into our two strong buy dividend stocks. First on the list, we're going to take a look at Copa Holdings. They trade under the ticker CPA, currently priced at $103. They are in the red a bit overall in the past year, down 6%, but in the last 3 months have gained 5%, and they do currently score a 10 out of 10 on the TipRanks Smart Score. Copa Holdings operates Copa Airlines, which is a leading Latin American airline operator. They provide passenger and cargo services across North, Central, and South America, as well as the Caribbean. They're known for their efficient operations, strong route network, and affiliation with the Star Alliance, serving over 80 destinations in 33 countries. Their business model focuses on low-cost operations and high on-time performance. Over the past 5 years, Copa has grown their dividend at a whopping 18% compound annual growth rate. And their current quarterly dividend comes in at $1.61 per share, for a dividend yield of 6.35%, well ahead of the sector average. They have a healthy payout ratio at nearly 44%, and their ex-dividend date is coming up soon on May 30th for a payment of June 13th. Their latest quarterly earnings report came out in the first week of May, where they beat on both earnings and revenue estimates. Earnings per share of $4.28 beat expectations by 34 cents per share, and revenue came in at $899 million, beating by over $11 million. The company did see strong operating margins and their capacity and passenger traffic increase. Just a few days ago, an analyst from TD Cowen reiterated their buy rating and also increased their price target. They noted that Copa's diverse network and revenues, as well as continued execution on cost control, are helping it navigate a turbulent operating environment. And with 5 current analyst ratings, Copa Holdings comes in as a unanimous strong buy, and their price target implies some pretty attractive upside potential. Analysts' average price target comes in at $150. That would imply an upside potential of 46% from current prices. And looking at those ratings down below, they all have double-digit upside ranging from 21% all the way up to 79%. And our second high-yield dividend stock is Rithym Capital. They trade under the ticker RITM, priced at $11.64. They are slightly in the green overall this past year, up just over 1%. In the last 3 months, slightly in the red, down nearly 3%. They do currently score a 9 out of 10 on the TipRanks Smart Score. Rithym Capital is a REIT, or Real Estate Investment Trust, headquartered out of New York, focused on real estate, credit, and financial services. Their operations span multiple segments, including origination and servicing, managing different mortgage loans and home loan servicing, as well as investment portfolios with single-family rental properties and real estate securities, as well as asset management. As a REIT, they are required to pay out a certain amount of their income to shareholders. That is taxed as ordinary income, so that is something to consider. But with that, REITs are known for their high yields. Their current quarterly dividend comes in at 25 cents per share for a dividend yield of 8.66% and a payout ratio at 47%. Their last ex-dividend was March 31st and paid out on April 30th, so a couple months till their next one. Their latest quarterly report was near the end of April. They did have some mixed results with an earnings beat but a miss on revenue. Q1 earnings per share of 52 cents did come in 5 cents ahead of analysts' expectations. Revenue, though, fell a few hundred million short, coming in at $768 million. Overall, the call highlighted strong financial performance in terms of earnings and growth in various segments, such as their Sculptor Real Estate Fund V and Genesis Capital. And following that earnings report, an analyst at Piper Sandler did upgrade their rating on the stock to a buy. They said that the shares are overly discounted, noting the Q1 beat was driven by servicing fee income and that Rithym generated a 17% core return on equity. There is a disconnect from these return levels and the stock trading at a discount to book value and only 5 times their estimated 2026 earnings. And with 7 current analyst ratings, we have yet another unanimous strong buy. The average price target comes in just shy of $14 per share, implying an upside potential of nearly 20%. Looking at those price targets down below, we can see a couple increasing their price targets, one analyst slightly decreasing it. They range from an upside of 11% up to 37.5%. So that is a quick look at 2 unanimous strong buy stocks, both with high dividend yields. Let me know your thoughts on these 2 companies in the comments down below. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.